Welcome everybody to the Morning Volatility Report. I am Andrew Giovinazzi, Chief Operating Officer of OptionPit.com with your morning heart-thumping sound. Ha! Welcome with the beat. Thank you everybody for that. Downloads our volatility report in the morning. It's actually it's growing pretty. It's growing. That's all I can say. Why? Well, because we do stuff like this. Mark's analysis on Kramer. That's our blog. Take a look at it. Mostly looking for. I have to say, if you read, I think VIX looking for a move. Right? VIX was pricing a move. We still have one event to go. And right now we've got, VIX is basically having trouble going up. We were up, what, 0.5% this morning, something like that. And the market, not going up. Okay. Let's take a look at volatility across the term structure. Up slightly. Okay, now we just had, this is the coldest response, and you never know how the market's going to respond, but historically, there was some pretty good pop, on basically a QE, and I think the market's saying they don't think QE is the best thing for Europe. I personally think our equities turned around the moment the sequester went in. If you time the date for the sequester and the fiscal cliff and all that, we've literally went straight up from that halt in government spending. Right? Again, just an opinion. But that's really when the U.S. equity market really started to jump. And the Europeans are basically still fighting they won't restructure like Germany did. And I think those are kind of some, well, again, big macro opinions. Everybody has them. But at least the market is answering this with a big harumph. Now, we did rally yesterday. Let's pull up our tick chart here. Let's get some SPY going. Yeah, we did rally a little bit. Let's do the 2-dayer. Okay, let's look at the 5-day. Okay, it's slowly creeping. Woo! Good day to close some longs, and then we're kind of sort of doing nothing. The second reason we're doing nothing, corporate earnings here are not great. We've had some decent news, but the earnings have just been what I'll just call, I would say, mediocre earnings season. Hasn't really produced much for us. So the market, I think the QE-inspired rallies feel now dead. So I think that changes the upside complexion of the equity market, meaning if we don't have those 1%, 2%, 1% blast-offs, that's taking the whole top end out of our broader market. Right? Financials haven't had a great earnings season, probably paying all the bills from the government, suing them. Right? But what you notice is really keep an eye on how vol is trading today. And I'll tell you why today could be a key day, because remember that implied vol is generally a forward vol perception. We don't know what forward vol is. If we actually see the VIX decline here a little bit and the market sells off a little, that's a big change in perception of movement. Essentially starting to write off the Greek situation. Like whatever the elections are, they're going to renegotiate something, nobody cares, but the Greeks aren't going to leave the euro. Okay? That's what I think, if VIX continues to tick down, is going to say. I think the trade that might start working better now all of a sudden is you kind of attack it by You could sell, you could trade butterflies, iron, like the iron condor trades, hit the out of the money stuff now while there's still some decent volatility in it. We've talked some iron condors, an option pit. Some clients have been using them and they've been working fine because the market hasn't really gone anywhere. So those type of trades continue to work out of the money. There's still some decent skew. I think these are the times to do them. You know, try to own some stuff sort of near the money, but sell more stuff out of the money, because it doesn't look like we're having the giant sell-off, okay? But we're not having the giant rally either, which is a vol killer, right? And we're getting tepid response out of the vol futures, which means they're not keeping a bid. If we take a look at the term structure, right? We're starting to normalize slightly. 1860 for the spot. We have a 19 Feb future, and we have a 20 August future. Okay, so a lot of the vol products are like 99. What are they? 90% Feb right now. If we really get a seriously low expectation, maybe back down to 16 or 15 for VIX, especially after the Greek election, they're going to crush this February future and the vol products with it, which could drive us down here. So at least for today, tomorrow, don't expect too much to happen. If we actually see a real markdown in VIX, they are essentially writing off what's going to happen with the Greeks, because the ECB is going to hold the euro together. And we could have that big vol expectation that we looked at yesterday, which looked very probable, is going to die away real quickly, because now the market's just shrugging off all these events. And it's back to, you know, do we grind a little higher or grind a little lower, depending on like real economic news, right? So I think those type where you hit those out of the money options, that's what you want to do now, even in some equities. You might start thinking about it. Again, keep an eye on this Feb vol future, VXX, UVXY. They could come under a lot of pressure if they kill that thing. So keep an eye. The harder these get hit, the more stable everything becomes, and the out of the money stuff is going to continue to be the stuff to sell, right? And we could even look at maybe short-term flies, some of the things that we look at in option pit, because we're just not going to get that huge rally. So, all right. I will be in for the chat here this morning. We'll look at some stuff. And that's kind of how it is. But for the most part, look to this for the shrug on what's going on in Europe. That's the big key. If we start to really reprice vol lower, I would not want to stand in the way of any long Vega in the big products. All right, everybody. You all have a good day, and I will talk to you very soon. Bye-bye.